Imagine turning a mere $1,600 zero cents into over $200 million zero cents. Sounds impossible, right? Not for Richard Dennis, a legend who didn't just build a fortune but rewrote the rules of trading. He proved that success isn't about innate talent or luck. It's about psychology, discipline, and a system you trust. In this video, we'll dive into the 10 most powerful mindset lessons from the man behind the iconic turtle trading experiment. These lessons help ordinary people become millionaire traders. Whether you're just starting out or looking to sharpen your edge, what you learn today could transform your trading forever. Let's unlock what truly separates winners from the rest. What if I told you that you don't need to be a genius to become a successful trader? No Harvard degree, no Wall Street background. All you truly need is the right mindset, a solid system, and a deep commitment to learn. This isn't just a motivational slogan. It's the core of Richard Dennis's belief, and he proved it. Back in the 1980s, Dennis was already a self-made trading legend. He'd turned $1,600 zero cents into over $200 million zero cents, using a simple yet powerful trend-following system. But he wanted to answer a fundamental question that had divided the trading world. Are great traders born or made? His partner William Eckhart believed trading talent was innate. Dennis, however, thought differently. He believed trading was a skill, like playing the piano or mastering martial arts, meaning anyone could learn it with proper training, even without a financial background. So, in 1983, Dennis launched one of the boldest financial experiments ever. He advertised in major newspapers, "No experience necessary, we will teach you how to trade." Thousands applied, and Dennis handpicked a few dozen. They weren't bankers, some were musicians, a blackjack player, a security guard, ordinary people with an extraordinary opportunity. These individuals became known as the turtle traders. In just 2 weeks, Richard Dennis taught them his entire system. How to identify breakouts, size positions, cut losses fast, and ride winners with discipline. Then he gave them real money, millions in capital, and told them to trade. The result? In less than 5 years, these amateurs generated over $100 million in profits. Many became independent trading legends. Dennis had proven his point. You don't have to be born a trader. You can be taught. But this lesson goes deeper than just strategy. What Dennis taught wasn't merely charts or systems. He taught his turtles how to think, how to control emotion, how to stick to the plan even when fear or greed crept in. Because in trading, the real enemy isn't the market. It's often your own psychology. Most people think trading success comes from secret knowledge or perfect predictions, but Richard Dennis showed the world something far more valuable. Success comes from consistency, structure, and emotional discipline. That's the difference between gambling and professional trading. So what does this mean for you? It means you don't need to be special to succeed. You just need to be committed to the process, humble enough to learn, and disciplined enough to apply what you've learned every single day. Dennis once said, "You could publish my trading rules in a newspaper and no one would follow them. The key is consistency and discipline." That quote captures the heart of his message. The rules aren't magic. The system isn't the hard part. The hard part is you, your behavior, your decisions, your mindset under pressure. The turtle traders weren't superhumans. They simply followed the rules, even when it was boring, uncomfortable, or painful. If you've ever told yourself, "I'm not smart enough," or "I don't have the background," remember this lesson from Richard Dennis. Trading is teachable, but only if you're willing to be taught. Because in the end, the greatest edge in trading isn't your indicators or your strategy. It's your ability to stay calm, stick to the plan, and show up day after day with discipline. That's what Dennis taught, and that's what still works decades later. Imagine standing at the edge of a fast-moving river. You could jump in and fight the current, battling every wave, or you could step into a raft, go with the flow, and let the river carry you forward. That's how Richard Dennis viewed the markets, and this became one of his most powerful lessons. Follow the trend, don't fight it, ride it. Richard Dennis didn't become a legend by predicting tops or bottoms. He didn't spend his days trying to forecast the exact turning point of every chart. Instead, he watched, he waited, and when a clear trend emerged, he jumped in with confidence. He knew something most traders overlook. Price doesn't lie. The trend is visible to everyone, but only a few have the courage and discipline to follow it. So, what exactly is trend following? At its core, it's simple. Buy when prices are breaking out and moving higher, sell or short when prices are breaking down and moving lower. And most importantly, don't argue with the market. You're not trying to outsmart it, you're aligning with it. Dennis built his fortune by following this exact principle. He didn't care why the market was trending, he only cared that it was trending. That's the mindset shift many traders never make. They want to understand every news headline, every earnings report, every economic number. But the trend, the price action, already tells you everything you need to know. When Richard Dennis trained the turtle traders, this is one of the first things he drilled into them. Don't try to catch the top. Don't try to buy the exact bottom. Catch the big middle of the move. That's where the money is. In other words, let the market start moving first, then ride the momentum. Stay in as long as the trend is alive. But here's the thing, following trends sounds easy on paper, but emotionally it's one of the hardest things a trader can do. Think about it, a stock breaks out and shoots higher. You hesitate thinking it's already moved too far. It can't go higher, so you miss the trade. Or worse, you short it just before it doubles. On the flip side, prices are falling, the trend is down, but you hesitate to sell because you believe it's too late. It has to bounce. So you do nothing and watch it drop another 20%. This is where most traders lose, not because they misread the charts, but because they let emotions override logic. Richard Dennis understood this better than anyone. He trained his students to trust the process, not their feelings. Don't get clever, he told them. Don't second guess the system, just follow the trend. And here's the beauty of this approach. You don't have to be right often. You just need to be right big when it matters. Dennis didn't aim for a 90% win rate. In fact, he accepted that many trades would be small losses. But when a real trend emerged, those trades more than made up for everything else. That's the power of trend following. You limit your losses and you let your winners grow. You don't need to know the news. You don't need to call the bottom. You just need to recognize momentum and have the courage to ride it. And when the trend ends, that's okay. You exit, take the loss if it's small, or lock in the gain if you rode it well. Then you wait patiently for the next trend to begin. This strategy isn't glamorous. You won't get to brag about calling the top of Bitcoin or the bottom of gold. But trend followers don't care about being right. They care about being profitable. Because the truth is, trends last longer than most people expect. And when you ride them with discipline, the results compound. That's what Richard Dennis built his empire on. He wasn't trying to outsmart the market. He was letting the market do the heavy lifting. And he just stayed out of its way. So, the next time you see a strong move happening, ask yourself, are you trying to predict the reversal? Or are you smart enough to join the wave while it's still moving? Because the market rewards those who follow strength, not those who try to fight it. And that is one of the greatest lessons from Richard Dennis. Ride the wave, stay with the trend, let the market work for you. Let's be honest, losing money in the markets hurts. It stings your ego, it makes you doubt yourself, and the natural human reaction, we want to wait, hold on, hope it'll come back. But in trading, hope is not a strategy. Richard Dennis understood this better than anyone. He didn't just talk about cutting losses, he built his entire system around it. For Dennis, this was non-negotiable. The moment a trade moved against you and hit a certain threshold, you got out. No questions, no hesitation, no bargaining. He had a saying, cut your losses before they grow teeth. That image is powerful. A small loss is like a small flame. You can stomp it out. But if you wait, if you deny, delay, or pray, that little flame turns into a wildfire, and wildfires don't care about your plan. This is where most traders blow up, not because they picked the wrong stock or entered at the wrong time, but because they didn't know when to quit. Or worse, they knew, but they didn't act. Richard Dennis trained the turtle traders to accept one brutal truth. You will take losses. But what separates winners from losers isn't avoiding loss, it's controlling it. It's knowing exactly how much you're willing to risk and having the guts to walk away when the trade goes south. Every turtle trade had a predefined stop loss. Not an estimate, not a guess, a rule. That number wasn't just on a spreadsheet, it was etched into the process. The moment price hit that level, they exited, even if it rebounded seconds later, even if it felt like a fluke. Because they weren't trading on feelings, they were trading on discipline. And over time, that made all the difference. So why do most traders fail here? Because the ego gets in the way. You don't want to admit you were wrong. You don't want to take the loss. You think, I'll just wait a little longer. But markets don't reward pride. They reward objectivity. Dennis once said, you should always know what you're going to do if things don't go your way. That means before you even enter the trade, you've already decided where the exit is. That's not weakness. That's professionalism. Think about it this way. A loss isn't a failure. It's the cost of doing business. It's a small fee you pay to stay in the game long enough to catch the next big winner. And that's what Dennis understood. He didn't try to avoid losing. He expected it. He built it into the system because he knew one huge win can make up for 10 small losses, but one huge loss can erase 100 wins. So, what can we learn from this? Don't justify, don't delay, don't fight the market. When the trade is wrong, admit it fast, cut it clean, and move on. Think of your capital like your oxygen. Without it, you're out of the game. Every time you fail to cut a loss, you're not just losing money, you're losing clarity. You're losing emotional control. You're becoming a hostage to hope. And no great trader operates from that place. Not Dennis, not the turtles. If you want to trade like a pro, not a gambler, you need to develop this reflex. Take the loss fast, protect your capital, stay alive to trade another day. So next time you're in a losing position, ask yourself, am I holding on because it still fits my plan? Or am I holding on because I'm afraid to let go? If it's the latter, you already have your answer. Remember, success in trading isn't about being right all the time. It's about doing the right thing when it matters most. And sometimes the right thing is to take a small step back so you can leap forward when the opportunity is real. Cut your losses short, let your profits run. It's one of the most repeated phrases in trading, but almost no one actually follows it. Why? Because while cutting losses is painful, letting profits run requires courage. And sometimes doing nothing is the hardest thing to do. Richard Dennis understood this paradox better than anyone. He didn't just make millions by entering the right trades. He made them by staying in those trades long after most traders would have cashed out. Here's the truth. When you see green on your screen, your instinct is to lock in gains. It feels safe. It feels smart. But trading isn't about feeling good. It's about maximizing opportunity. And the biggest opportunities, they don't come often. But when they do, you have to be in the trade and willing to ride it. Dennis taught his turtle traders to follow the trend until the market clearly told them it was over. Not when they felt nervous, not when the price dipped for a few hours, but only when the trend had objectively broken. That's what it means to let profits run. Think about this. You can't catch a 30% rally in oil or a 50% breakout in gold if you exit after a 2% move just because you're afraid it might pull back. The market doesn't pay you for being cautious. It pays you for being disciplined. One of Dennis's favorite strategies was using trailing stops. He didn't guess the top. He didn't have a fixed profit target. Instead, as the trade moved in his favor, he moved his stop up behind it. That way, if the trend continued, he stayed in, and if it reversed, he exited with profit. Simple, logical, emotion-free. But don't be fooled, this is hard. Because as the trade grows, so does your fear. What if it reverses now? Should I take the profit while I have it? What if I give it all back? These thoughts creep in every time, and Dennis knew it. That's why he trained his traders to trust the system, not their feelings. He once said, if you're making money, don't be in a hurry to stop. Let that sink in. Most traders are in a rush to exit winning trades, but the real professionals, they're in a rush to protect their edge and stay in the game. And here's the beautiful part. You don't need to win often. You just need to win big when the time is right. Dennis accepted that most trades would result in small losses or small gains, but every so often a trade would take off, and when it did, he let it go as far as the market allowed. That's the mindset. Don't kill your winners. Let them breathe. Let them grow. Because one trade, one patient, disciplined, high conviction trade can make up for 10 small losers. And that's the math that makes a trading system work. But this takes trust. Trust in your process, trust in your stop loss, and most importantly, trust in your ability to detach emotionally. So, how do you develop this skill? Start by reframing how you see profits. Don't view them as something you have to protect. View them as something you have to manage. Your job isn't to grab quick wins. Your job is to execute your edge over time. And that requires patience. Patience to hold, patience to let the trend mature, patience to do nothing while the market is doing the work for you. So the next time you're in a winning trade, ask yourself, am I exiting because the trend is over, or am I exiting because I'm afraid? Because fear is loud, but your system, your process, that's your voice of reason. And that's the voice you need to listen to. Richard Dennis didn't just let profits run because it made money. He did it because it was the logical extension of everything he believed. Trading is teachable. Discipline beats emotion. Systems outperform gut feelings. And profits are the reward for those who have the courage to stay the course. So if you want to trade like a professional, don't just chase trades. Don't just cut your losses. Learn to hold your winners, because sometimes the best move in trading is no move at all. Picture this. You're standing in the middle of a trading floor. Bells ringing, prices flashing, markets moving fast, traders shouting, charts going red and green. Chaos, noise, pressure. And in the middle of all that madness, one trader sits still, calm, focused, eyes locked on his rules, not the noise. That was Richard Dennis. You see, Dennis didn't believe in trading by instinct. He didn't care about feelings, predictions, or gut calls. For him, trading was a process, not a performance. A good trade wasn't one that made money. A good trade was one that followed the system, win or lose. And this formed one of his core principles. Use a systematic approach every single time. No improvising, no guessing, just rules, clear, logical, tested. Why was it so important? Because Dennis understood one universal truth about markets. Emotions are the enemy of consistency. Fear will stop you from entering the trade. Greed will make you overstay. Doubt will cloud your judgment. Overconfidence will make you break your own rules. But a system, a real system, doesn't care about your feelings. It doesn't hesitate. It doesn't panic. It just does what it was designed to do. Identify opportunities, manage risk, protect discipline. So what did Dennis's system actually look like? It was built around trend following, but it had specific, repeatable rules for every situation. When to enter a trade, how much to risk, where to place a stop loss, when to exit with a profit or a loss. There was no room for maybe, no, I think it'll bounce, no, I feel good about this one. And here's what made it powerful. It worked for everyone, not just for Dennis. So remember, he trained ordinary people during the turtle experiment. They weren't traders. Some had never seen a chart before. But when you give someone a clear, logical system and teach them to follow it with discipline, they can become consistently profitable, just like the pros. That's the magic of systems. They remove guesswork. They let you trade from a place of calm, not chaos. And they give you something most traders never have: repeatability. When you follow a system, you can track your performance, you can learn what's working, you can improve. But if you're trading based on emotions, how do you know what's real? One day it works, the next it doesn't, and you're left confused, reactive, and frustrated. That's not trading, that's gambling. Dennis once said, you have to minimize your reliance on emotion and base your decisions on a tested, repeatable process. Think about that. It's not about avoiding emotions. We're human. But it's about not letting emotions lead. Your system is the pilot. Your emotions, they ride in the back seat. Here's what happens when you adopt a systematic approach. You stop chasing trades. You stop forcing action. You stop overthinking. Instead, you just follow your process. Every trade becomes measurable. Every outcome becomes data. And win or lose, you have control. That's powerful. That's freeing. That's professional. Now let's be honest, even with a great system, you'll still have losing trades. Dennis knew that. He didn't aim for perfection. What he wanted and what he taught was consistency. If your system gives you a long-term edge, your job is simple. Follow it every day, especially when it's hard. Because here's the truth. The market is unpredictable, but your behavior, that can be consistent. And that's where your real edge lies. So ask yourself right now, do you have a system? Is it based on logic, not emotion? Do you follow it even when it's uncomfortable? If you answered yes, then congratulations, you're already thinking like Richard Dennis. And that mindset, that discipline, that system-based approach, it's the foundation of real sustainable trading success, because in the end, feelings fade, charts change, markets shift, but your system, if it's strong, will always give you something solid to stand on. When people think of great traders, they imagine big wins, giant positions, massive profits, but Richard Dennis, he saw things differently. For him, the real power in trading wasn't about how much you could make. It was about how well you could protect yourself when things went wrong. Because here's the brutal truth. You're not in the game to make money. You're in the game to stay in the game. And the only way to do that is to manage risk like your trading life depends on it, because it does. Dennis understood that markets are unpredictable. You can't control outcomes, but what you can control is how much you lose when you're wrong. And that's why risk management wasn't just part of his system, it was the backbone of everything. Every single trade had strict parameters: how much to risk, how big the position should be, where the stop loss had to go, and none of it was left to chance. He taught his turtle traders never risk everything on one trade, never get emotionally attached to a position, never let one decision destroy your account. One of Dennis's most important risk rules was position sizing. Most retail traders placed trades randomly, 100 shares here, 500 there, based on feeling, not on math. But Dennis used logic. He sized his positions based on volatility, account size, and most importantly, the maximum acceptable loss. Let's say the market was calm and trending smoothly. The system might allow for a slightly larger position, but if volatility spiked, the position size shrank, because when uncertainty rises, protection comes first. This wasn't just strategy, it was survival. Dennis had seen traders wiped out not because their strategy was bad, but because they risked too much on one idea. Think about it. Even a great system with a long-term edge can be destroyed by one oversized trade that goes wrong. So Dennis made sure every turtle understood this. Before you enter a trade, ask yourself, what's the worst case scenario and can I live with it? And if the answer was no, you didn't take the trade, period, because chasing opportunity isn't worth it if it puts your entire capital at risk. But risk management goes deeper than numbers. It's also about emotional stability. When you risk too much, every price tick becomes personal. Your heart races, you obsess over the chart, you panic, hesitate, overtrade, and you make bad decisions. But when your risk is controlled, you stay calm, you stick to the plan, you trade like a professional. Dennis once said, you can be wrong half the time and still make a fortune if you manage risk properly, and that's the key. He didn't need to be right all the time. He accepted losses because they were small, controlled, and expected. His turtles were taught to risk only 1% to 2% of their capital on any single trade. Why? Because even if they lost 5 trades in a row, they'd still have 90% plus of their capital intact. That's staying power. That's what keeps you in the game. And in trading, longevity is everything. If you can survive long enough, the market will eventually hand you opportunities. But if you go broke trying to be right today, you'll never see tomorrow. So what does this mean for you? It means stop focusing only on how much you can make and start focusing on how much you're willing to lose. Before you enter a trade, ask, what's my maximum risk? Does it fit within my rules? If this goes against me, can I walk away emotionally and financially? Because trading isn't about being aggressive. It's about being prepared. It's not about winning every trade. It's about avoiding the one loss that takes you out of the game. Risk management isn't the sexy part of trading. It's not what gets likes on social media, but it's what builds careers. It's what saves portfolios. And it's what Richard Dennis mastered better than almost anyone in history. So the next time you're tempted to go big on a trade, remember this lesson. Amateurs focus on reward. Professionals protect their risk. Be the professional, play the long game, stay in the game. Every single day in the market, a silent war is being fought. Not between bulls and bears, not between retail and institutions, but between discipline and emotion. And the outcome of that battle, it decides whether you win or lose. Richard Dennis knew this war intimately. He saw it not just in others, but in himself. Because no matter how experienced you are never immune to fear, greed, doubt, or hope. But here's what separated Dennis from the rest. He never let his emotions make the final decision. Discipline always came first. You see, it's easy to follow your system when things are going well, when your trades are green, when everything's moving in your favor. Discipline feels natural. But what happens when things fall apart? When the trade reverses right after you enter? When you get stopped out 3 times in a row? When you're tempted to just skip the stop loss this time? That's when discipline becomes everything. And that's where most traders fail. Not because they don't know what to do, but because they don't do what they know. Dennis taught his turtle traders this essential truth. Your biggest enemy is not the market. It's your own mind. He saw it firsthand during the turtle experiment. He trained people from all walks of life. Some had zero trading experience, but the ones who succeeded, they weren't the smartest. They were the most disciplined. They didn't argue with the system. They didn't improvise when scared. They didn't break rules just to feel better. They executed precisely, consistently, and without emotion. Because emotion is a trickster. It whispers lies. Just this one time. It'll come back. Don't sell yet. Double the position. You'll recover faster. But those decisions made in the heat of the moment, that's what wipes out accounts. Discipline, on the other hand, it doesn't need to feel good. It just needs to be right over time. Dennis once said, a good system is one that you can follow with discipline, not just when it's working, but when it's not. Because even the best strategy in the world will have losing streaks. Even the cleanest setup will fail sometimes. The real question is, can you stick to your plan when your emotions beg you to abandon it? That's the test. That's the moment that separates traders from gamblers. Discipline is doing the right thing when it's boring, when it's uncomfortable, when it hurts. It means entering when your system says enter, not when you feel excited. Holding when the trend is alive, not exiting just because you're nervous. Exiting when your stop is hit, even if your ego screams, wait. Discipline doesn't silence emotion, but it keeps emotion in its place. And that's what Dennis trained his students to do. He gave them structure, he gave them boundaries, not to limit them, but to protect them from themselves. Because in trading, your worst decisions almost always come from your strongest emotions. Think about the times you've broken your own rules. Were you calm, focused, or were you angry, scared, desperate to win something back? That's why discipline isn't just a trading skill, it's a life skill. It's what allows you to stay consistent even when nothing else makes sense. And here's something else. Discipline also protects you from overconfidence. After a big win, many traders feel untouchable. They increase size, they skip stops, they ignore their process. But Dennis warned against that mindset. The moment you feel above the rules, he said, is the moment the market will humble you. So how do you build real discipline? You start with a written plan. You trade small so emotions don't hijack your brain. You track every trade and hold yourself accountable. And most of all, you commit to the process, not just the outcome. Because the outcome, you can't control it. But the process, that's your domain. And the more you honor that process, the more control you gain over your trading life. So the next time the market tests you, and it will, ask yourself, am I reacting or am I following my discipline? That one question could be the difference between a blown account and a breakthrough in your trading journey. In the fast-paced world of trading, it's tempting to chase excitement. The big win, the lucky breakout, the viral trade that doubles your account overnight. But Richard Dennis knew something most traders forget. Consistency beats intensity every time. Dennis didn't build a $200 million 0 cents fortune by making one perfect trade. He didn't win by being lucky. He won by showing up with discipline, with patience, with the same process every single day. He understood that trading is a long game. You're not here to get rich tomorrow. You're here to survive, adapt, and grow over months, years, decades. And that kind of success, it doesn't come from being brilliant once. It comes from being reliable always. So what does consistency really mean in trading? It means you follow your rules in good times and bad. It means you don't get lazy after a win and you don't panic after a loss. It means you keep showing up even when the market feels slow, even when your last 5 trades were losers, even when you're not feeling it. Dennis taught his turtle traders to be machines of consistency. Enter on the signal, size your trade by the formula, set your stop, follow the trend, take the exit when it hits, not sometimes, not when you feel good, every time. Why is this so powerful? Because it removes chaos. Most traders are emotionally all over the place. After a win, they get aggressive. After a loss, they pull back too far. They tweak the system based on emotion, not data. But when you're consistent, your results become trackable. You can spot patterns, you can improve, and most importantly, you stay grounded when the market throws you off balance. Richard Dennis saw this clearly. He often told his students, don't worry about the outcome of any one trade. Focus on executing your process consistently. The profits will take care of themselves. That's what separates professionals from amateurs. Amateurs chase outcomes. Professionals chase execution. And here's the thing, consistency isn't glamorous. It doesn't get you applause. It doesn't give you dopamine spikes, but it builds something better than excitement. It builds stability. Let's use a simple analogy. Think of trading like going to the gym. One killer workout won't change your life, but showing up 3 times a week for 6 months, that will transform everything. It's the same in the markets. One huge trade won't make you a pro. One good month doesn't make a career. But 6 months, 1 year, 3 years of consistent execution, that changes your identity, that rewires your instincts, that makes you unstoppable. So how do you build consistency? Create a clear system, one you can follow. Write your rules down. Make them visible. Commit to a daily routine, same time, same process. Track your trades. Learn from the data, not from feelings. And above all, show up no matter what. Some days you'll feel off, some weeks you'll lose money, but none of that matters if you stay the course. Because over time, consistency compounds. And consistency doesn't just help your results, it helps your mindset. You feel more in control, you feel less emotional, you recover faster from setbacks, you trust yourself more, and when you trust yourself, the market can't shake you as easily. Richard Dennis didn't care about being perfect. He cared about being predictable in the best way possible. Predictable in execution, predictable in risk, predictable in following the plan. That's how you last in this business. Because luck fades, but consistency, that's what builds legacy. So the next time you're tempted to chase a hot tip or double your position because you feel good, or skip your routine because you're bored, stop and remember what Richard Dennis taught. Consistency isn't exciting, but it is everything. The markets never sleep. Charts move, candles form, prices tick up, tick down, and as traders, we often feel like we need to be doing something. Enter a trade, exit, re-enter, switch charts, scan new setups. The temptation to act is constant. But Richard Dennis had a rule, one that sounds simple but is incredibly hard to follow. Don't trade just to trade. Overtrading is one of the biggest silent killers in this business. It drains your capital, it clouds your mind, and worst of all, it slowly erodes your discipline without you even realizing it. Dennis understood something most traders don't. Patience is a position. Sitting out is not weakness, it's strength, it's control. It's knowing that the best traders are selective, not active. During a turtle experiment, he drilled this into his students. Only trade when the setup is there, not when you're bored, not when you're frustrated, not when you want to feel productive. Think of trading like fishing. A skilled fisherman doesn't throw his line every 10 seconds. He waits, he watches, he understands the water, the timing, the behavior of the fish. Because throwing the hook nonstop doesn't increase your odds, it just wears you out. It's the same in trading. When you force trades, your edge disappears. When you act without a plan, you're no longer a trader, you're a gambler. And when you're in too many positions, your ability to manage risk drops to zero. Overtrading doesn't just hurt your account, it hurts your confidence. Because when the results are inconsistent, you start to second guess your system. You change things midstream. You start looking for new indicators, new strategies, when in fact the real problem is you're trading too much. Richard Dennis didn't believe in constant activity. He believed in high probability setups. If the conditions weren't there, he didn't force it, even if it meant sitting out for days, sometimes weeks, because he knew the market always comes back, but your capital won't if you keep wasting it. So why do traders overtrade? It's not about opportunity. It's about emotion, fear of missing out, revenge after a loss, boredom, pressure to do something. But none of those reasons make a trade more valid. They just make you more vulnerable. Dennis taught his turtles to build a system and then wait for the market to come to them, not the way around. Because a true professional doesn't chase, he positions himself where opportunity is most likely to appear and then waits. Want to avoid overtrading? Here's how. Define your setup clearly. If it's not there, don't trade. Limit the number of trades per day or week. Quantity over quality. Use a checklist. If the trade doesn't check all the boxes, skip it. Take breaks. Step away from the screen. Let the market breathe and let yourself reset. Track every trade. When you review your log, you'll spot patterns, including emotional triggers that lead to overtrading. Richard Dennis once said, "You don't have to make money every day. You just have to protect your capital until the opportunity is right." That mindset is what kept him in the game long after others had burned out. Because here's the truth. Most traders don't fail because their system is broken. They fail because they couldn't sit still. And sitting still, waiting for the right moment, takes more strength than most realize. So next time your fingers are itching to click that buy or sell button, pause and ask yourself, is this trade part of my edge or part of my impulse? If it's impulse, walk away. Because sometimes the best trade is no trade at all. Richard Dennis was one of the most successful traders of his time. He made hundreds of millions. He built a system that changed lives. And yet he never stopped learning, never assumed he knew it all. Because he understood a powerful truth. The market is always changing, and to survive, you must evolve with it. Too many traders reach one level of success and then they get stuck. They stop reading, stop reflecting, stop adapting. But in the world of trading, stagnation is the beginning of failure. Dennis believed that learning wasn't something you did once. It was something you did forever, because every market condition, every loss, every trade has something to teach you if you're willing to listen. So what did continuous learning look like in Dennis's world? First, it meant staying curious. He always asked, why did this setup work? Why did it fail this time? What changed in the market environment? That curiosity kept him sharp, kept him from becoming arrogant, kept him improving. Second, it meant learning from experience. Dennis knew that books are great, but real education happens in the field. You have to take trades, make mistakes, feel the emotion, and still act on your rules. That's how you build instinct. That's how you build wisdom. And that's why he encouraged his turtle traders to journal, review, and refine constantly. Third, it meant staying adaptable. The market isn't static. Some years trends are smooth, other years they're choppy. News cycles change, volatility spikes and disappears, and a strategy that worked last year might underperform this year. Dennis didn't cling to old methods out of pride. He adjusted when needed, not by chasing fads, but by evolving intelligently. That's the key. Stay flexible without losing your foundation. Fourth, he stayed humble even after building a fortune, even after training millionaire students. Dennis never acted like he had all the answers, because the moment you think you've mastered the market, you know it, that's when it humbles you. He once said, even the best traders can't predict everything, but the best learners, they always come back stronger. So how can you apply this principle? Start by asking better questions. What did I learn from my last losing trade? Am I still following the market or am I fighting it? Where do I need to grow technically and emotionally? Then make learning a daily habit. Read market books, watch quality content, backtest new ideas, seek mentorship, review your trades every week. Growth isn't a destination, it's a mindset. And don't just learn facts. Learn about yourself, your strengths, your triggers, your biases, because the more self-aware you become, the better trader you become. Richard Dennis didn't succeed because he had all the answers. He succeeded because he was always asking better ones. So if you truly want to become a great trader, remember this. Markets evolve, strategies come and go, tools change, but the trader who keeps learning, keeps asking, keeps growing, that trader will always have an edge. So keep your mind open, keep your ego in check, stay hungry for knowledge, because the moment you stop learning is the moment the market starts teaching you the hard way. And the beautiful thing is there's always more to discover, always another level, always a deeper layer of mastery. So chase that just like Richard Dennis did, not for the money, not for the fame, but for the pursuit of excellence. So there you have it, 10 timeless lessons from Richard Dennis, one of the greatest trading minds the world has ever seen. From mastering your emotions to following trends, to cutting losses and letting winners run. Every insight he shared wasn't just theory. It was battle-tested wisdom from a man who lived and breathed the markets. But the real question is, what will you do with these lessons? Because knowing is not enough. Action is what changes everything. So take one principle from today, just one, and start applying it in your trading journey. Build your system, track your trades, follow your rules, and most of all, keep learning, keep growing, keep showing up. If this video inspired you, help us inspire more traders by doing 3 simple things. Like this video to let the algorithm know this content matters. Subscribe to the channel so you don't miss the next deep dive on trading psychology and mindset. And drop a comment below. Tell us which of Richard Dennis's lessons hit home the most for you. Remember, successful trading isn't about finding the holy grail system. It's about mastering yourself. Until next time, trade smart, stay disciplined, keep building the mindset of a champion. Thanks for watching.